Welcome to Informed Investor. Infosys, one of India's leading IT services company, recently announced its financial results for the second quarter of fiscal year 2025. However, the stock witnessed a decline by more than 4% as it missed street estimates. Now, before we jump into the Q2 results, let me give you a quick roundup of what's been happening with the IT sector in general. We've all seen how tough the global environment has been. Central banks, including the US Federal Reserve and our very own RBI, have raised interest rates to their highest levels in years in a bid to bring down inflation. Now, when interest rates are high, borrowing becomes more expensive, and that leads to business to cut back on their investments, including their IT budgets. This directly impacts Indian IT companies because when businesses spend less on technology, fewer contracts are signed and ongoing projects are often get delayed. Since a significant chunk of Indian IT companies' revenues come from the clients in the US and Europe, the weak demand from these regions has been a major struggle for quite some time now. Okay, now coming back to the Q2 results of Infosys. Talking about the revenues or the top line, Infosys reported revenues of 40,986 crore, which is an increase of 4.2% compared to the previous quarter and a 5.1% growth compared to the same quarter last year. This is on the back of increasing traction in generative artificial intelligence deals and cost optimizations. Looking at the bottom line of profitability levels, profits grew to 6,516 crore, which is a 2.2% growth on a quarterly basis and 4.8% on a year-on-year basis. But how was the geographical performance? As you know, India IT companies export a majority of their services, especially to the Americas and Europe. Now, if you look at the different regions, the North American region saw a slight decline of 2.6% to 57.4%. A significant chunk of revenue comes from the American region, followed by Europe, contribution growing by around 16.7% at 29.4%. India contributes a mere 3.1% of Infosys revenues. Now, in terms of industry performance, the banking, financial services and insurance or BFSI sector, or in short financial services, is an important vertical for Infosys, making up 27.5% of revenue, followed by manufacturing at 15.7%. Coming to Infosys operating margins, which is the profit they make from their core business activities, and obviously the higher the number, the better. Infosys reported operating margins of 21.1%. Coming to deal wins, the total contract value of the company's deal wins came in at $2.4 billion, 41% of which are new deals. This is about 68% lower than the same period last year. Now, looking at some key metrics, the utilization rate is a key performance indicator for IT companies, measuring how effectively their resources, which is employees' infrastructure, are being used. It's a critical metric that directly impacts a company's profitability, efficiency, and overall success. Looking at the image, utilization rates stood at 84.3%, including trainees, and 85.9% excluding trainees, slightly better compared to the previous quarter and the year-ago period. And the total employee headcount also witnessed a slight increase to 3,17,788 employees, of which 39% were women employees. The attrition rate stands at 12.9%. Now, what about the future outlook? Infosys has consistently provided guidance on its future outlook, a practice that sets it apart from some of its peers in the Indian IT services industry. For fiscal year 25, the management expects a revenue growth of 3.75 to 4.5% in constant currency terms on the back of improved spending across BFSI subsegments. This is positive as revenues in this quarter had grown by a mere 3.3%. Moreover, operating margins are also expected to remain in the same range as 20 to 22% for fiscal year 25. The management has also declared dividends of 21 rupees per equity share and has fixed November 8 as the payout date. And that's not it. There is more optimism ahead as the US Federal Reserve is expected to cut interest rates as they did in the previous Fed meeting. And according to Fitch, the Fed is expected to lower rates to 3.5% by the end of 2025 and further to 3% by June 2026. This implies lower interest rates, which would stimulate economic growth, leading to increased business activity and a corresponding rise in the IT spending, which bodes well for the entire IT sector. Now, having said that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.